Hi, welcome to the Client First Capital Learning Channel. My name is Amar. This is Kyle. Kyle's a CPA. And today we're going to be talking about what happens when a deceased person owes taxes. So we're going to go through kind of the process with that. We'll also look at a couple of different types of accounts and what happens to them from a tax perspective, specifically qualified plans, so 401ks, IRAs, etc., life insurance contracts, and then also look at just regular non-qualified accounts, which could be a brokerage account, checking account, etc. So, Kyle, what happens when a deceased person owes taxes?
Yeah, so there's a lot of things that can go into a person's estate, and lots of things to consider. There's things you can do, beforehand, if before you die, to mitigate taxes, and there's different strategies to benefit your heirs and mitigate the tax liability when you do die. The main thing that I try and stress in these situations is that a deceased taxpayer gets a stepped up tax basis in their assets when they pass away. So if your parents have owned their house since 1980 and it's appreciated, significantly, that's something you'd want to keep in your estate, and maybe that wouldn't be a good candidate to gift before you pass away. So you really want to just take inventory of all of your assets, everything you own, and where it's going and what the tax impact is.
Yeah, I mean, I think that's a big piece in just a planning perspective is that, things that have a potential for a large step up in cost basis, probably want to hold on to, and things that have a smaller, or if any, you could potentially use to kind of sell and kind of get that through that way. So let's say January 1st, or somebody passes away, their taxes that they owe are from January 1st of that year all the way until the point that they pass, correct? And then,
Yeah, and so when you pass away, you can make an election. You can either do a fiscal year end to kind of wrap up that specific year, or you can just do the calendar year like you've been doing your whole life. So if somebody passes away, let's say in May of this year, they can do a regular 2022 tax return through for 2022, and or they can elect to do it May 31st year end, and then file a pro rata tax return 3.5 or 4.5 months later. So whenever you choose the year end, or whenever the year end is, it's the same. 3.5 months. 3.5 months from the date you choose.
yeah. And then let's say if you're married and one spouse passes away, the surviving spouse still files married filing jointly for that. Is it for the first year, or is that the last year?
It's
That they
just for
do?
the 1 year, in the same year that they pass away, you get
Yeah.
to get the qualifying widower married filing joint filing status, and then after that would be a single taxpayer.
And that's very important because you're going to lose the standard deduction, and the tax tables are going to shrink, right? So it's not very favorable from that perspective for tax planning purposes. And let's say if you have a larger estate, I'm assuming you're going to have to file some additional tax forms, right? So normally we do a 1040. There will be another form that you have to fill for the estates and trusts, right?
Yeah, and so the trust filing, the estate and trust filing, is actually a pretty low threshold for the income tax purposes. There's a whole other estate tax filing that's a whole other topic for another day, if you have substantial assets. But in terms, for most taxpayers, for income tax purposes, you'll have to open up an estate while the estate is in probate. And then once it is completed, that's when you file a final estate tax return. And the filing threshold for that's only $600. So if you have $600 in income within an estate, before the assets pass on to the heirs or their spouse or whoever it may be, you would have to file what's called a Form 1041, which is a trust return, essentially.
Yeah. Seems like more paperwork.
It is a lot of
Right?
paperwork, and it's a lot to do, and it's even if you have a relatively simple tax situation, just filing that estate return can be quite a to-do. So
Yeah. Maybe here's the last question. What if, and I guess we didn't even get into the IRAs, the qualified plans and all that, but just keeping with our time constraints, if you were to just fire off IRAs, name beneficiary, 401ks, name beneficiary, they would have income respect to a decedent. At that point, then that's how those assets get taxed. If you have non-qualified assets, you have named beneficiaries or a trust, they'll go through the process that you just spoke about through the estate. Life insurance works exactly like the same as qualified plans when you have a named beneficiary, except there's no income respect to a decedent because it's typically tax-free, right? So it's outside of those bounds. My last question here is, let's say if you were deceased, but you owed the IRS money before you passed away, and then you passed away, what happens then?
the IRS still wants their money. So their tax liabilities don't die with when you pass away. And so any lingering tax liabilities would be the responsibility of your heirs and your decedents. So make sure to pay all your tax liabilities before you pass, because that's you don't want to leave that mess to your family.
Yeah, that's sometimes it's unintended, right? Because you're going older, you forget certain pieces, trying to keep track with this paperwork and all. Sometimes you have support, sometimes you don't have support to kind of organize this. So best to get help of a professional. So if you need tax help and you want to work with somebody that can kind of help you navigate this space, please reach out to Kyle or myself, and we can definitely help you get on the right path. Thank you for watching. Please hit the like button. If you have questions or comments, please put them below, and we'll go from there.
Sounds good. Thanks, Amar, and happy to help if anybody has questions. And yeah, it's a complex issue with a lot of nuance to it. So these are all situations we deal with frequently, and happy to help if anybody has questions.
Sounds good.